Welcome to the Mortgage Rate Weekly Market Update for the week of July 14, 2019. Hello, I'm John Thomas with Prime Residential Mortgage here to give you your update. Well, last week we saw mortgage bonds sell off, causing mortgage rates to move higher. So they moved off the lows of the year. If you take a look at the bond chart on the screen, you can see mortgage bonds have been rallying very strong since back in May. Been going up, which has made mortgage interest rates move lower and lower. And then you can see right there on that green candle, which was last Thursday, the mortgage bonds hit the highs not seen in about 2 years. So mortgage interest rates were at the lows of the last 2 years. But then on Friday, we see that red candle. They sold off and closed just below that line of support, which became a line of resistance. And then on Monday, tried to rally, but closed right back down, right at that ceiling of resistance. And then the rest of the week they kind of sold off, tried to rally back again, sold off. So the trend is switched now. We had that long-term upward trend, but the short-term trend now, as you can see, is for mortgage bonds to sell off. The key there is we drop below the 25-day moving average, and the next floor of support is all the way down at the 50-day moving average. So there's room for the bonds to keep selling off and moving even lower. So we need to get it back above that 25-day moving average before we'll have a nice floor of support. So with that in mind, we're going to recommend locking your mortgage interest rate to close in the next 30 days because the short-term trend could be for rates to continue to move higher. Longer term, if you're out past 30 days, you can consider floating, but anything less than 30 days, go ahead and lock it in. Now, if we dig into the economic news, we saw two measures of inflation last week. The big one is the Consumer Price Index, or the CPI, for June of 2019. It showed inflation increased in June on the consumer level, but moderated on a year-over-year basis. So the headline increased 0.1% from May, but decreased from 1.8 to 1.6 year-over-year. And that big giant drop was pretty much because of the price of gasoline dropping about 3.6%. Then we saw the Producer Price Index, or the PPI, for June, which is a measure of wholesale inflation. It dropped from 1.8 to 1.7%, but the core reading, which strips out food and energy, was unchanged at 2.3%. So the wholesale core has been running hotter than the consumer inflation at about 2.3%, but that has not been passed on to consumers. So that was a non-issue report. The market didn't even react to it. Then we had the jobs report for June, which showed 224,000 jobs created. That was well above expectation, 160,000. And the unemployment rate ticked up from 3.6 to 3.7% because more people have joined the workforce again. So that kind of ticks up the unemployment rate. Then we saw weekly initial jobless claims come out on Thursday. It showed 209,000 claims, which was a decrease of 13,000 claims from the previous week of 222,000. Now, this report includes the July 4th holiday, so claims were probably understated. So we'll have to see this week if we do actually have the jobless claims trending down, or if that was just an anomaly because of the July 4th holiday. Now, in housing news, we saw CoreLogic release their home price index for May of 2019. It showed home prices were up 0.9% from April and are up 3.6% year over year. But the big news, the prediction moving forward, is for home prices to be up 5.6%, which is at a whole 1%. It was 4.7 for the previous month. Now they're at 5.6. So CoreLogic is seeing the housing market getting very strong as we move forward, which means it's a great time to buy because you're going to have a nice appreciation on your investment. Now, in the local news, we got the next free first-time homebuyer seminar on Wednesday, July 24th in Wilmington, Delaware, at Independent Small eXp Realty office right off of 202. That's from 6 to 8 p.m. And then we're back in Newark on Saturday, August 10th at the Christiana Hilton Hotel from 10 a.m. to noon. You can register for either one of those events by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. And then in Maryland, we're having one coming up Saturday, July 27th in Edgewood, Maryland at the Ramada Inn from 10 a.m. to noon. You can register for that event by giving us a call at 410-412-3319 or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.